Welcome to episode 7, Blokes with Beards talking business. Alan at Acumenica, Chris at Ajax, and Mark at Straight Line Legal. So we're here ready to ask your questions. Can whoever's listening and watching or whatever, just say hello in the comments so that we know that we're not actually talking to ourselves.
We're very insecure. We need the ego boost.
LinkedIn cuddle. So if you can just say hello, just let us know. We're like I said, we're not talking to ourselves. Mark is going to be the legal guy and do the legal disclaimer again, just so that you all know the score.
Okay, here we go.
Fire away, big man.
Right, that should be appearing now.
Hey, hi, Laura. There you go, beautiful. The short version is, as always, if you take anything that we've said on this as advice rather than just general guidance, you're a lunatic.
I should have just left it with that, Chris, actually. Forget all the lawyer rubbish.
The even shorter version is don't sue us.
Yeah, we've got Mark. He'll come at you.
We bulldog enforcer from Manchester. So if you said you were here and you're not here, he's going to come and hunt you down. Right, I've got a quick legal question for you, Mark. It's not really in relation to what we normally talk about, but it was something that I seen somebody posted on LinkedIn. It didn't ask us specifically, but he's asked on LinkedIn, so I'm going to ask it for him. Basically, he's in Glasgow Airport. He bought a drink. It said on the bottle £1.69 on the pre-printed package, but he got charged £1.99, I think it was, or £2. I mean, airport prices, the usual. Is that legal to charge something above what's printed on the packaging? Or is that a myth that we've all kind of grown up with, or what?
Well, I don't know why there was a difference in the price, but maybe they just got it wrong. There's a load of cases that you study at law school about what constitutes an offer, a formal offer, or what constitutes something that they call in law an invitation to treat, and it's like less than an offer. So I suppose the question is whether it was a formal offer at the £1.69, and by taking it to the till, that was an acceptance. But normally in shops, the price advertises sort of an invitation to treat, and then when you take it up, they sort of say, here's the price and you'll pay there, and that's the offer and formal acceptance. So there's a few tricky points around that. But one point to bear in mind is if you're selling to consumers, you've got to take reasonable steps to make sure that the price that you're displaying is accurate. So there might be something in there. Obviously not worth quibbling over, 30 odd p, but on a larger scale, it's certainly worth bearing in mind.
Okay.
I was used to. I remember when I was a lad, and you get your chomp bar or your wham. They always had but they always had a little bit that said recommended retail price rather than price, and that seemed to be the get out of jail. My shop would just say, well, that's recommended, but I don't take that recommendation. I'm charging you more.
Yeah, it's always worrying, isn't it, when they're way higher than the recommended retail price, and you sort of ask a few questions, don't you?
Got to say, Chris, that's a nice set of teeth for somebody that was reared on wham bars.
Hey, Geordie diet.
We've covered the Geordie diet. We've covered the Glasgow diet. I think we should also do maybe a separate health podcast as well.
Yeah, wham bars and sausage rolls.
As a special treat, we used to get rhubarb. We used to grow rhubarb in the back garden, and we used to get as a treat, which is probably a misnomer, but we used to get a stalk of rhubarb and a wee plastic bag full of sugar and send out the back with that to basically rot our teeth for the summer.
Was that because you like the rhubarb though? Because we grew it in the garden, and for me, the rhubarb was just a delivery device for the sugar, because the rhubarb tasted like crap.
It was a bit like a sherbet. It was a low-rent sherbet dib-dab.
Yeah. A plastic bag full of sugar, a bit of rhubarb.
Right.
Fantastic.
I've got a question. Lawrence Vellum, a client of mine, so I'm going to take this one because I can see he's actually here. So we'll answer that, and then we'll go for it. Hiya, Lawrence. Lawrence has asked, can his business accounting year run whenever he likes? He thinks his runs from November to November. I'm going to assume that's the case, Lawrence. I never got a chance to check. But he wants to know, is there any pros and cons with aligning with the HMRC tax year? In other words, 31st of March or 5th of April? There isn't. Sometimes it's best to have it, have your accounting year different from the tax year, because it gives us an opportunity to take advantage of different tax rules over the sort of, if it straddles the two, it gives you two types of tax rules, so it can work in your favour, it can work against you. It does help when it comes to simplifying things, so it's easier to be able to look at your personal tax return and compare it to your corporation tax return, so that you can see where the dividends have been paid and your expenses and so on and so forth have been paid. But for me, there isn't an awful lot of difference in it. And if I'm being perfectly honest, from a selfish point of view, for Acumenica clients, if all our clients had the same financial year end, we would get an absolute kick-in. If it was 31st of March, we'd get an absolute kick-in between sort of the 1st of April and the 30th of June. We'd have to get like 400 sets of accounts done, because that's within our kind of service level agreement that we get the accounts within a certain time, and then we'd be sitting on our hands for the next 6 months sort of thing. So from my point of view, I don't see any advantage, and really for your point of view, I don't see any advantage either. So I hope that kind of answers the question, Lawrence. We're quite getting hit a bit in the office, and I've actually had a couple of questions about this in my DMs this last week. It's about life insurance through a limited company, being tax efficient and what have you. Chris, I'm going to ask if you can take this one, because you know, basically we're talking about a relevant life policy. So could you tell us the process of a relevant life policy and how it differs specifically to sorry, my desk just moved, just a general life policy?
Yeah. So relevant, in terms of how it differs, a relevant life policy is no different to the standard plan that you might take out, that you might say, right, well, I want this for 20 years. If I die over the next 20 years, it's going to pay out to my family. That concept is exactly the same. They came up with these relevant life plans about 15 years ago now, where if you meet a certain amount of criteria, you can put your life cover through the business. And the sort of people that these appeal to tend to be smaller companies, because if you've worked in a big company, you often have a big group life scheme where everyone's sticking, death in service, lots of staff. It's a really cost-effective way of doing it. But the people who were buggered were the small business owners or contractors, people like that. Now, these plans, you effectively just take out life cover yourself. But if it is, what are the criteria? You can't take it out past 75. It can't be for tax avoidance. Smooth.
Do you like that? I could keep talking.
No, you pulled it off. I didn't draw any attention to it. It can't be for tax avoidance. So basically, just for you and your family, you can't use it for business purposes, like key man to cover if something happens in the business. It's got to be to protect the family. But as long as you use the trust, follow the steps to set up a relevant life plan, which is just do it in the right way through a company that offers them, you don't have to pay P11D. So you pay for it through the company. It's not classed as a P11D benefit. It's offsettable against corporation tax. So from a tax efficiency point of view, anyone who runs their own business, it's mad not having your life cover done in this way, But that doesn't mean if you've got life cover, go and cancel it to put this in place, because if you've already got health conditions, you might find even with all the tax savings, setting up a new one could cost a load more, because you might have something that you wouldn't be able to get again. But I mean, from a savings point of view, if you think about it like this, if you've got a policy that you pay 100 quid for a month personally, if you're higher rate taxpayer pulling dividends out of the business to pay for that, you're probably paying about 50 quid a month in income tax and about another 50 quid a month in corporation tax. So the cost from your profits is about 200 quid to pay £100 life insurance. Whereas if you pay it straight out of the business profits and it's all deductible, it's costing 100 quid out of your business profits. So they are, a mega advantage for small business owners.
And there isn't any tax inefficiency in when it pays out, because it's just paid out like a normal life insurance policy. It doesn't go into the company; it goes to whoever the beneficiary is anyway, doesn't it? So
it has to go into a trust, and that trust,
I beg your pardon.
Generally has to be for your family. So big tick in the box, because it's going to avoid the delays of going through probate. It can go straight to your family. Just like I said before, it can't go to other people in the business unless it's a husband and wife thing. But I mean, other shareholders.
Okay, so can I follow that up? I guess Lawrence has asked, what about indexed universal life insurance contracts? Are they relevant in the UK? Now, I've got no idea what that means. So hopefully, Chris, you do rather.
Well, I'm not going to lie, that exact terminology isn't really used in the UK, universal life insurance contracts. So I'm scratching my head a little bit with that one, Lawrence. I'm going to say no, just because I've never heard of them. I don't think they're relevant. It might have a different name. So maybe when someone else is answering a question, I might just have a little fiddle on Google.
Okay.
But no, not something I've come across before.
Well, Lawrence, maybe you can, I don't know, maybe you can expand on that if you can.
If you can, I'll seriously type away and come back to it.
Right, Mark, you're up. Philip is asking, he's got a question about contracts. When offering a range of services ranging from year-long to one-off consultancy, when do we not need to write a service agreement? I think I know the answer to that, and I think you're probably going to say you always want to write a service agreement, but go for it anyway.
No, you pretty much answered it, Alan. So I'll let you can take it from me if you want. No, it's you're absolutely right. I wouldn't recommend. It depends, doesn't it? I always say to people, it depends, and that's a typical lawyer response. But it does depend on the type of contract you've got. If this is a one-off contract, it's not very risky. It's not worth a lot of money, and it's over a short term. Maybe you could get away with not having a formal written service agreement, maybe. And every business has to look at the risks and take a view. But as a lawyer, my recommendation is that any time you enter into an agreement with a client, you should have a written contract. And I don't know whether that's quite a simple response. I don't know whether there was something more nuanced that you were asking about the difference between long-term or short-term contracts. You can add more detail if you want, Phil, but generally, get a written contract if you can.
Phil, I think I might be wrong. Tell me if I am. I think you're a kind of contractor, so you probably there's probably an IR35 sort of status slant that you're probably wondering about there as well. So again, probably Mark's right in as much as almost we tend to advise that any client who does any work at all gets at least kind of standard T's and C's drawn up, but where possible a work order or a purchase order or something like that. But perhaps you're right in terms of having a fully blown contract is probably a bit extreme for maybe like a 4-hour job or what have you. But I don't know.
The The thing is, if you've got a good...
Quite easily done, isn't it?
Yeah. I mean, if you can set up a good template contract that you can use for, bigger projects and smaller projects and have tweaks that that you can make quite quickly, or you've got two contracts, maybe one for one type of work, one for another type of work, and you just use the appropriate one. That's sometimes a good solution. I've worked with clients to draft, for instance, different contracts for B2B, business to business sales, and then B2C or business to consumer, because they do require slightly different things to be included. So you could set up, different templates for different types of jobs and do it that way. And then once you've done it once, it's just a matter of filling in a few blanks and firing it out every time you get a new job in. And on the IR35 point as well, by having a written agreement, you can set out quite clearly what the relationship is between two parties to avoid any suggestion that you're trying to undermine IR35, for instance. You can set out that this is an independent contractor relationship, etc., etc. And whilst that's not, as we've said in past episodes, whilst it's not definitive in the eyes of the court or HMRC, it's a really good indicator for you.
I mean, as we all know, I'm saying we all know, as Mark and I all know, and probably most of you guys that are listening that are contractors, as you all know, any tribunal or HMRC inquiry will look through the contract to the working practices anyway. So it's good to have the contract, but the contract has to really reflect the working practices. So that's more important than anything else, I would say.
Yeah, exactly. I think Phil's just added a comment there to say that you've been implementing contracts for everything, but you're wondering what the risks are if the work isn't ongoing and you can complete it on the same day. Well, I'll give you an example. It depends what business you're offering. I could complete a really high value contract in a day if there wasn't a lot to do, but it could be potentially, if something went wrong, then that could be worth a lot. So I suppose the amount of time that you take to do something isn't necessarily reflecting the amount of risk involved or the value or the potential comeback to you if something did go wrong with the service.
Cool. It seems, by the way, that all the questions or all the comments are coming through into our dashboard, which is refreshing. So at least we know that we're actually getting asked questions this week.
Yes.
So kind of similar in terms of, I've just seen Robert Gill has actually explained that this universal life insurance, Chris, is, quotes, a daft policy you can get in the US where the insurers loan you cash based on your life cover, mental health, etc. So
yeah, I've had a little look at those universal life policies, and there's definitely nothing comparable to that in the UK. The closest you would get would be a whole of life policy. Some of those will guarantee you're insured for your whole life as long as you keep up the premiums, and you can get ones that have an investment element underneath it, but loaning against them, taking money in and out of them isn't really much of a thing. So that isn't something we've got over here, and you definitely can't put those through the business as an expense if you take one out.
Cool. All right.
At least you've been vindicated, Chris, that it's a daft US policy and not something that we'd have over here.
Yeah, thank God.
So I can't remember the guy who asked me this, but basically it's something that I get asked fairly regular anyway, but this was specifically asked in terms of the LinkedIn Live. Is I'm thinking about taking on my first employee. Sure, there's loads of legal obligations and responsibilities. What are the main things to make sure I don't get wrong? What are the main things to make sure I don't? That's right. It didn't sound very good English, but I mean it works. Mark, do you want to give us a couple of quick ones so that we can, and I'll just refresh myself on certain aspects of it as well?
Yeah, absolutely. So this obviously is a bit of a whistle-stop tour through your, the broad legal obligations. I couldn't give you a full list here because there are just so many. But a few things you need to be thinking about. the first one, which is one we've touched on a few times now, is making sure you're happy that with the status of the person that you're taking on. So, are they a worker? Are they an employee? Self-employed? And you've said here that they'd want them to be an employee. So make sure that your contract reflects that they're an employee, and make sure your working practices also reflect that. A few things you need to think about when you first take them on. There is a right for employees to receive what's called a written statement of their terms of employment. So there's actually, you can go on the government website and they list out all the things that you need to include in that written statement. And if you don't, then the employee can sometimes get compensation. So it's always worth making sure that you get a written employment contract, and your employment contract can include all of those things. It's basically like a tick box exercise to go through and make sure you've given them certain information. So they've got the maximum working week, an annual leave entitlement to be aware of as well. So typically employees can't be required to work more than an average of 48 hours a week. However, they can expressly agree to waive that. So you can do a formal opt-out. And it's interesting, when it comes to workers, this 48-hour working week applies across all of their jobs. So if you've got someone who has another job, you need to make sure that between those jobs they're not working over that 48 hours. So again, sometimes it can be quite routine to, with the employment contract, send out a 48-hour maximum working week opt-out, and the employee can just tick a box to say that they opt out of that, so there's no issues there. And then, of course, they're entitled to 5.6 weeks paid annual leave as well. So you've got to, and if they don't take it, you've got paid leave to consider as well. They've also got family-related leave for employees. You've got sick pay to be aware of as well. So the amount they're entitled to is SSP, statutory sick pay, but you can agree to pay more than that if you want, and many employers do. They've got an entitlement for minimum notice period if you want to terminate employment. And again, for every year that they work for you, then that increases by a week, up to a maximum of 12 weeks. Then, of course, once they've been with you for 2 years, they've got the right not to be unfairly dismissed. So then it gets a little bit trickier for businesses to dismiss employees after that 2-year period, because there's various rights that they have. I did hear that as well, Chris. I don't know whether that.
I thought you were just backing up.
I haven't as well. I was inside my office, but.
Or maybe it was just a warning that the bullshit warning was sort of going off. I don't know, the waffle warning. So yeah, sorry about that if that was loud for anyone. So just cutting back in, after 2 years, obviously they're protected from unfair dismissal. So you've got to make sure you're following fair processes if you're looking to terminate their employment. And ACAS is a really good place to look to get details of the types of policies you can implement. All employees are protected from discrimination. That's typically on the grounds of, here we go, age, disability, gender, marriage, pregnancy, or maternity, and race. I think religion as well, and sex. I might have missed one, but I think they're all of them. So you've got to be careful if you're, and that actually goes all the way to the beginning of when you're offering people jobs as well. So be really careful if you've discriminated on one of those grounds when you've declined someone a job, then they might even be entitled at that point to pursue a claim. So just be careful. And then obviously you've got pension provisions. Chris may want to touch on that as well. So employers are required to automatically enrol their eligible workers or employees into pension schemes, and then make minimum contributions as well. And of course, then you've got other issues to consider, like data protection, et cetera, et cetera. One big issue, a cost, and something you should factor in, is that as soon as you take on one employee, subject to a few exceptions, you've got to get employer's liability insurance. That is mandatory, which means you can't get out of it. And so obviously that's going to be an additional cost as well. And then obviously there's all the other issues you have to think about with tax and the finance aspects, which Alan and Chris can touch on now.
That was a whistle stop version, was it? Jesus.
That's the most whistle stop I could do it.
Just on that, a mate of mine got sacked for his job on the Dodgems, but he reckons it was funfair dismissal. Sorry, guys. Just kind of on the other things. From my perspective, you're going to have to register as an employee with HMRC, and you're going to have to set up a auto-enrolment pension policy. I think Mark probably touched on that. I kind of zoned out by then. And get a payroll system up and running. So, like using your accounting system, normally got a payroll module, or there's other things. And then you've got a few things that you've got to do to keep HMRC happy, and you've got to report real-time information. So when or before you make a payment to an employee, you've got to notify HMRC. Straightforward enough. It's normally all done through your payroll system, but it's something that you've got to do. Mark, did you say employers' liability insurance? You did, didn't you?
Yeah.
Did you mention that they've got a right to work, to make sure that they've got a right to work? I don't know if you did. So if they're overseas, well, someone else would need to verify that they've got a legal right to work in the UK.
Yeah.
But other than that, it's pretty much straightforward, I would say.
Other than that,
it's really easy. There's not much to think about, really.
Yeah, just crack on. I mean, you can almost understand why people pay somebody cash under the table rather than have to go through that rigmarole.
Yeah, not that
I find as well. I don't know if this is kind of similar in your experience, Mark, but I find that the legal aspects that you've touched on in terms of written terms and conditions, specifically that one, tends to get kind of ignored. A lot of the time you'll find that we've got clients coming on board that they've got employees in place and they've not got any paperwork at all. What is the sort of scope to liability in that respect? If you've not got the paperwork in place, I mean, I take it it's the old coaching horses.
It's an interesting one. It's not. I've discussed this with a few clients actually. So the risk is not major because if you don't provide the section, it's called the Section 1 statement because it's Section 1 of the Employment Rights Side. If you don't provide your Section 1 statement, and then there's other things that you need to provide within 2 months as well. If you don't do any of that, then the employee potentially has a claim for, I think the latest is between 2 and 4 weeks of their pay. So it's not a huge amount, but it also has to be a tag on to another claim. So typically, an employee can't just bring a claim with regards to not getting a Section 1 statement. It has to be a bolt-on to another claim that they're bringing in the tribunal. So when you think of it that way, it's not typically a huge risk financially for employers, but it is one. Obviously, if you've got lots of employees and you've not given any of them a Section 1 statement, the issues can add up quite quickly.
Cool. Okay. One other thing that just sprung to mind there is when you're setting an employee's rate, the pay rate, whether it be their salary or what have you, there's a few things that you've got to add into that as well. So if you're saying that your client that you're going to be paying, say, 15 quid an hour, it's important that you remember that 15 quid an hour also has to cover, on top of that, you've also got holiday pay, 5.6 weeks, which can mount up. You've got employers' national insurance, which is not insignificant. I think it's 13.8%. So that's a fair scud, although the first 5,000, if you've got employees, you get the employment allowance. So it may not be for the first employee, it might not be the end of the world sort of thing. You have got auto-enrolment costs, so you're going to have to pay pensions at 3%, is it? 3% the employers?
3 for the employer at the minute, yeah.
So that's, again, these things add up. Mark mentioned the right to, what did you call them? Family payments or family?
Yeah, basically it's family-related leave.
Family-related leave.
Yeah.
most of these are
reimbursable.
SSP, which Mark also touched on, statutory sick pay, that's for the last few years is not reimbursable. So you've got to pay that out of your income. You don't get that back for HMRC like you do with, you do get that, you get SNP reimbursed, and you used to get SSP reimbursed, but that's no longer the case. So that's worth bearing in mind. So if you think you're paying 15 quid an hour, the reality is you're probably paying 18, 19 quid an hour. Maybe not quite as much as that, but it might be actually. So if you're looking to cost that back out to a client, say for example, you're going to make sure that you take everything into account so that you're billing it out properly. So that's something to bear in mind. A lot of guys are taking on new employees at this time of year, with schools leaving and what have you. So again, one thing that we didn't talk about at all there is you've got to make sure that you're paying the national minimum wage.
Yeah.
The appropriate age application, so.
Yeah, absolutely. And Chris, is there anything you want to add on the pension side of things? Because pension side of things, Alan touched on it there, I touched on it briefly, but is there anything you think that someone taking on a new employee might want to think about?
Nope. No, it's boring as sin. I think you've covered it. For this question, the cost is probably the main consideration. There's a bit of admin, but the cost of the premiums is the big thing to think about.
I can say from experience that a lot of the auto enrolment pensions, there's Nest, there's Pension B, there's a lot of them, but Nest is the kind of government one, isn't it? And it's a complete pain in the arse to set up and to administer. There's a website and what have you, but if you've not got the right tools linking it and so forth, it can be a right pain in the arse. So just bear that in mind as well. What we would normally find, the best thing to do is just get your accountant to take care of it, or your pensions guy. So, speaking of pension guys, Christian, another IFA, I believe a friend of Chris's, contacted Chris's at least. I'm maybe speaking out of turn. So he started.
We could be friends. It's fine. I like it.
Right, cool. Okay. We're all friends here. He started a networking group with a paid membership. The membership just covers the venue. There's no profit. He's been collecting the fees through his business, and for the first few times, he wants to formalise, get an annual fee and a direct debit set up, and feel it should be separate from his business. He's concerned that the costs of setting up a new business for that and what have you is going to make it kind of prohibitive. I don't know. I mean, it sounds to me like it's probably more hassle than it's worth setting up a new business. I would have said that if he's got the correct accounting system in place, that you can effectively hive that into a different department and what have you, get all the costs, all the income and what have you through there. So that would therefore go through his business. And if it's no any profit in it, then it's not going to make any difference to any tax liabilities. If there's a loss, it's going to be easier to set the loss from that business against the general trading business. So I wouldn't be concerned about doing that. I asked if there's any a not-for-profit. Is a not-for-profit lower maintenance than a normal company? There isn't actually a not-for-profit business type, I think, is what I'm kind of trying to get at. There are community interest groups, and there's companies, community interest companies, I beg your pardon. There's companies limited by guarantees, and there's basically share companies limited by share, which is we would know as a normal limited company. Mm-hmm. There's no any simplification in terms of 1, 2, or 3. They're always complicated. They're as straightforward as the other. I wouldn't say you would have any less accounting requirements for any of them. So you're going to be paying an accountant or a chunk of fees to another company for using that company. I suppose the question would be as if your accounting requirements are going to be different in the main company if you've got this in it or out it. I don't see it being an issue either way. But my suggestion would be just keep it in the company, but hive it off. And
Yeah, and that makes sense. I'd agree that that's a sensible move. I mean, obviously, from a legal perspective, there's a couple of other things to think about. Obviously, you want to make sure for your new sort of community group that you've got T's and C's to make sure you're covering, all the obligations of each party. What happens if people cancel? All those kind of things. And also, I was just thinking then, when Alan was talking about the not-for-profit point, I wonder whether what he was trying to get at was whether that there's some sort of charity or charitable status that might help or something like that. And you can set your business up as a charity, but I think probably what might be a struggle on this with this particular situation is proving charitable purposes.
Doesn't sound like a charitable endeavour.
Absolutely not charitable.
Yeah,
exactly. It is just. I think the fees that it was generating, he just wanted to make it clear to the members he wasn't, profiting from it himself. He's not the point of him setting the group up wasn't to make money. So the fees he does collect are just to cover the overheads. I think that was the main reason not-for-profit came out as a buzzword.
Yeah, but I think Alan's picked up on all the key points. So I couldn't think of anything else other than that charity point. But I think that's very tenuous. But based on what you've told us, and obviously the other issue to think about is if he's hiring a venue, make sure that T's and C's with the venue that you've reviewed them, so that if, for instance, everyone pulls out last minute, that you're not going to get stuffed with paying cancellation fees to the venue or paying the full price anyway if no one turns up. And obviously make sure that you're if you need it, that you've got public liability insurance in case anyone, trips and smashes their head open while they're at the venue.
Would the venue's insurance not cover that, would it not?
So when it comes to holding events, there's a little bit of a grey area because there's something called the Occupiers Liability Act, and basically there's obligations placed on whoever is an occupier under the act of a certain area. So if you're renting a whole venue, and for that evening, effectively, you've got control over how it's set up, where the tables are, how people are moving through the premises and whatnot, and you put a big obstacle in the way, or you put a, something there that causes someone to trip over or whatever it is, then there's an argument that you might be an occupier of that space, and you might have a liability. So then whoever's injured themselves might want to sue the owner of the premises. That's one option. They might be an occupier, and they might also want to sue this chap because they basically, were responsible for the setup and for safeguarding people while they were there. And they could sue both of them, arguably. And so it's useful to bear in mind that they should have some cover in place in case that happens.
Related question. Sorry, Chris, on you go.
I was just making an observation. Your timekeeping might require a little bit of work turning up to these sessions, Mark. I tell you, he knows a lot of stuff about a lot of stuff, doesn't he, Alan?
Well, we're assuming he's not that shite.
It could be.
I mean, it is one. He's very well informed. Can I just ask a kind of related question? And again, it's not coming from anything other than me. See, when you're talking about venues and whatever, your liability. See, when you're in a car park and it says, there's a sign that says, vehicles parked at owner's risk or what have you, no liability accepted whatsoever. That's nonsense, isn't it?
They don't.
Your liability is your liability, regardless of whether you've said it's no. Is that?
So there's an argument here as to whether there's basically when you park on someone's car park or land or whatever it is, then typically or arguably at least there's a contract being formed between you and them as to they're letting you park on their land, and either you're paying a fee, for instance, for for a couple of hours to stay there. So there's a contract there, right? And if they're displaying these signs really prominently, then there's an argument that it's possibly, sorry, that keeps pinging up, that it's possibly an exclusion of liability. So in a contract, you can put a clause in to say that even if we mess up, then you can't sue us. Or even if we mess up, you can sue us, but only up to a limit that we've set. So one view might be that is a an exclusion of liability in the contract and that it holds. But it's quite hard to rely on these kind of signs. And another way of looking at it might be that by parking on there, you voluntarily assumed a risk. But again, those arguments are much harder to bring than people think they are. So yes, typically they're not great and possibly not enforceable, but you end up getting into silly arguments over, was this a contract? Was this a reasonable term? Did they voluntarily assume the risk? And it's not worth it most of the time.
Is there not any implied duty of care or anything like that?
Yeah, there will be some form of duty of care. If you're letting people park on your land and something awful happens, all the cars explode or whatever it is, it depends on what caused it. But arguably, yeah, there's typically always a duty of care when someone's on your land. This is the Occupiers Liability Act. That's why they made it. And potentially also, people could sue you under negligence if you've been negligent as well.
Mm-hmm. Well, there you go. That was just to satisfy my own curiosity.
You had a running in a car park, have you, Alan?
What's
You had a running in the Sainsbury's, have you?
No, actually, no. Cool. I think that's us, guys. Unless anybody's got any other questions that I've missed, and I think we're fairly up to date, and I think we're running a good time. Chris, Mark, have you got any sort of closing remarks on anything that you want to discuss or bring up or anything like that?
No closes. I guess from my point of view, what's topical in the news is obviously general election. So a lot of people are tempted to make some knee-jerk decisions on what to do with their pensions. And I would generally just say, don't go doing anything too rash before you've had a bit of time to think things over, because you never know what's coming.
I mean, for me, for a general election, the knee-jerk reaction for me is, oh, good, 6 weeks of people on the telly slagging each other off and behaving, grown men behaving generally like children in the playground. But that's just me. And I also checked to make sure that I was going to be out of the country in the lead up to it. Thankfully, I'm on holiday in July, so I'll not see it anyway. So that's good.
I have no comments. I refuse to comment on politics.
Excellent.
Cool.
So,
lovely.
Very
have we got any more questions? Have we got anything coming in that's been missed? Let me have a quick scan. I don't think there is on my end. Can't see anything.
Yeah, we're all good. So that's us at 12:43. So we'll just call it quits. Thanks. It was a wee bit more interactive this week, which was nice to see. Not obviously Mark's threats last week. I mean, I say threats. I mean hissy fit. Is obviously improved matters. So excellent. Yeah. So if that's us, we'll say goodbye and we'll see you next week.
All right, beautiful. See you there.
Next week, have we got a guest next week? I think it might be the IR35 one next week, is it?
I think it is, yeah.
It's a sexy topic.
Well prepared as usual. It's maybe not sexy, but it's important, boy. Right, see you later, guys. All the best. Good weekend.
Cheers, everyone.
Bye.
Bye.